Let's talk a little bit about the Federal Reserve, and I just want to put this in context before we go into details, because I face this challenge every time I talk about the Federal Reserve. When I talk about it as a quasi-governmental agency, I get flooded with emails with people telling me, no, Steph, it's a private corporation, it's privately profitable, and so on, which is not, I mean, anything that's given a monopoly by the government and is closely tied to government policy can't be called a merely private corporation. On the other hand, when I talk about it as a private corporation, people then write back to tell me that it's entirely beholden to government and politics and power and so on. So can you talk a little bit about just the general role and context of the Federal Reserve? And then I think let's start drilling in a little bit to the corner that it's painted itself into, where its interest rates are effectively zero, which is this major way of trying to deal with economic problems, and the fact that it's pumped all this money in the economy with very little positive effect. But let's talk a little bit about the Federal Reserve, its private versus public status, and then if we can deal a little bit about its cornered status, I think that would be well worth talking about.
Let's start with some sort of big picture view. I believe the Federal Reserve actively tries to obfuscate and hide its actual structure. I mean, the fact that you and I could even be debating with a large number of people what its ownership is and to whom it is beholden for its power and operations. Yes, there is a board. Yes, there is stock in the supposedly private corporation that is held by the large banks, including some foreign banks that through traditions and acquisitions have come to hold the stock of the Federal Reserve. And yes, there is a nominal preferred interest payment on the preferred stock. It's totally irrelevant, except to understand that the goal of the Federal Reserve in its policy actions, at least very importantly, is to support the big banks. No question about the fact that they've been doing it, bailing out, buying, handing out loans in huge amounts and so forth. The evidence is there. They do support the large banks. But what do they do with their profits? Perhaps you know, Stefan, and I'll just ask any rhetorically person watching this. Do you know what the Federal Reserve does when it earns interest on the Treasury notes it holds?
My understanding is it turns it back into the general Treasury.
Exactly. So who is it that gains the profits, so to speak? It's the federal government. And we should say that the appointing of the chairman and the board of governors by the president and advice and consent of Congress clearly means to me they are a branch, although somewhat at arm's length from the federal government, but not very when you give all your profits back to the government, not to the supposed shareholders.
I assume that the Federal Reserve is kept at a distance, so it's not subject to Freedom of Information Acts. I mean, that would be one of my first guesses, so I'm certainly no expert in that area.
They do want some privacy, and some make some sense, but the reality is they've gone way beyond necessary privacy for policy decision discussion. They've actually outright hidden actions, which is why Ron Paul's attempt to try and get information, Fox News and Bloomberg both sued the Federal Reserve saying you're a part of the government, you need to divulge as a public entity what your operations are, and they've refused. It goes on and on. They are a corrupt organization in my view, and they try and keep it secret because what they are doing is trying to keep secret from people that money is worthless. When you look at it that way, it becomes much simpler. And when you look at what they do to manipulate interest rates, it becomes even scarier. What they do is buy up treasuries. When you buy treasuries, the price of them goes up because they're a market player and buys and creates demand. Therefore, the price goes up. When the price goes up, the effective interest rate goes down. And they do that by printing new money. They gave it to the banks, which left it on deposit and reserves, so it didn't affect the economy in an inflationary way or even very much to a recovery, as the banks have not been making loans with the new money. Then they sold the treasuries to the Federal Reserve. But think about it going forward. This process doesn't work. You can't print up more money to drive interest rates down without the dollar and other currencies related to it also collapsing. And that's why I predict in my lifetime that there will be a repudiation of the dollar in terms of lack of confidence by the world community, and therefore it will have to be an issue of a new currency with a new promise in the future that it will be redeemable in something useful, most obviously something like gold or perhaps a basket of generally traded fungible currencies. That's an extreme view, and of course in my lifetime may not be investable now. But I've made lots of recommendations to buy gold and oil and other commodities, agricultural commodities over the years, and they've turned out pretty much right. The one I've not been right about is interest rates. My view of that is because the Fed drove the rates down in a market manipulation that was bigger than I thought they could achieve. But I don't think they can keep it going, which is why I think it's important to see that today they were talking about removing their strong efforts to drive those rates down, their exit policy, even laying out the plan over time of selling off agency debt, raising rate on the deposits at the Fed from the banks, all of that in a process, in a kind of a kabuki scheme to suggest that they will be vigilant about a potential drop in the dollar. I think we are beyond the point of return no matter what they do. They've already gotten us into a mess we won't get out of.
And I sort of feel that the large number of foreign lenders, as you pointed out, the majority of the government deficit has been funded by foreign lenders. I think that they have US dollar holdings as assets on their books, and everyone is afraid either to stop buying or to start selling because it's going to collapse the dollar, which is going to wipe out a large amount of assets on their books, which I don't think any foreign governments or institutions really want to do. So I think there's almost a game of chicken right now, like who's going to go first in starting to dump the dollar, because I think everybody's terrified of what's going to happen if that avalanche starts going downhill.
That's right. And you pointed out that not only is it true that foreigners hold so much of our debt that they are afraid of what will happen to it rather than just us. And they are not dictating our policy, but let's say that our central banks often talk to their financial leaders. Tim Geithner made many trips to China, as did Hank Paulson before him, to encourage them to hold and keep purchasing our debt. I don't know how long those jawboning processes can work, and I don't know how long the Federal Reserve can use backdoor operations like they did during the last crisis of currency swaps to give foreign central banks the opportunity to take the dollars from our central bank, give it to their banks, who then went out and bought some of our government debt to help prop up our mess. All of that are shenanigans behind the scenes, and in the short term are very important, and I sure expect them to be trying to kick the can down the road. But this is not going to last, in my view. In the decade or so, this thing will explode.
Yeah, it can't. I mean, right now, banks are not lending and borrowers aren't borrowing. I think there's lots of reasons for it, and you go into some in your book. The obvious one is that when you can borrow money at virtually 0% interest, what is your incentive to engage in any kind of risky lending? Just buy a couple of T-bills and what's that old banker rule, 363? You borrow at 3%, you lend at 6%, and then you go and play golf at 3 p.m. So I don't think that there's really any incentive for banks to lend, and while lending is frozen, economic growth is frozen, everyone's in a paralysis, because I think a lot of people unconsciously or consciously know that this problem is coming, the debt ceiling problem is coming. Businesses are sitting on a lot of cash. They're afraid to expand because of uncertain regulatory, legal, tax, and governmental environments. So yeah, I think that this logjam is going to be, at some point, is going to have to result in a devaluing of the dollar.
I couldn't have said it better. I just would add that the tricks by which you can take a fairly low but very secure spread in an interest rate, multiply it by 20 through leverage, allow banks to not have to go to the markets for finding creditable people to loan money to. They can just make it by being their own hedge funds, and you see it in the numbers. The banks have made most of their money by supposedly playing the market as opposed to being banks. I think that should be outlawed. I think Glass-Steagall should come back. Many things could lower the risk. I don't think banks should be ever too big to fail. They should just never be allowed to be too big, et cetera, et cetera. But the bankers and the Federal Reserve are in cahoots with the powerful leaders of our country. I don't expect that to change, and therefore I do expect that we will have risks that taxpayers are expected to be paying for and bailing out in the future. The egregious salaries paid to the bankers just after they got the financial backing from our government should be considered reasons for anger and for throwing the bums out, but it didn't seem to get much traction despite the obvious, in my view, misallocation of resources. But you said it better than I did. I think the system is corrupt, and it's going to be difficult for anybody to protect themselves unless they understand this well enough to make the investments that will protect them from the government and the big banks.
Now, listen, I think we should probably try to talk a little bit about some of the general investment trends that you think would be most helpful. Now that we've scared the pants off everyone who's watched or listened to this, I think let's hold out the olive branch of hope and profitability. So where do you see the major sectors of investment opportunity in the stormy and turbulent times ahead?
Well, I would add one to the ones that I've been repeating here of obviously precious metals and energy in the sense that I think that particularly it's important for people to consider investments outside their home country. The problems I've mentioned in the U.S. are not alone in the U.S. There's certainly many countries that have taken a path not unlike our own of government deficits to finance short-term improvements, but in the long term that will destroy value. Also, many governments get their fingers in the pie of taxation and so forth. So I'd add opportunities. Our own group has done a lot of investing in South America. We recommend things as junior mining investment opportunities in countries like your own in Canada, as well as in places in some, not many, but in Africa and South America and China, Asia, Philippines. These are all opportunities outside your own country that you should consider. But I think the one that if I were to pick, I already mentioned natural gas for energy, but the one that seems most out of line with sensible reality of my basic belief that paper currencies are just paper is that interest rates are much too low. How you invest in that is tricky. There can be direct investments through futures contracts on the government agency debt, but the simpler ETFs are also a vehicle into which one could invest in such a expectation. And to get to the immediacy of this, to some extent, rates are held down by us having a debt ceiling where the government is not going out and borrowing as much because they would then exceed their debt ceiling. They've been pilfering various slush funds around, and once we get through this August 2nd deadline, even one way or another, I suspect that interest rates have to go higher, partly because they can't go lower in the short term. But think about it for the long term. What confidence do you have in the paper dollars if, in fact, they do settle and decide to spend a lot of money? Well, they're going to print a lot of money. Or if they settle and decide to be an austere situation, that could mean a very slow economy, but confidence in that economy could easily suggest bankruptcies or higher need for credit coverage for potential losses, and that would also potentially raise interest rates, especially when the QE3 comes back to try and put the economy back on track again for the election coming up next year. A little bit long-winded, but my point of that is almost any scenario I see of, rates can't go much lower, and they're going to go higher, in my view.
Right, so cash under your pillow, right? What's the old joke? What's the difference between monopoly money and fiat currency? Well, at least people know monopoly money is worthless. But so money under your pillow doesn't do you much good because it's going to be turned into kindling. Gold, obviously a great investment. Somebody pointed out to me recently that a good suit in 1900 cost about an ounce of gold, and a good suit in 2011 costs about an ounce of gold. So it's actually really tracks well with the material goods, so that's useful. I think I would certainly make a short-term argument that it may be worth stocking up on some foodstuffs just to avoid some price increases over the next while. But there are investment opportunities, and I think this is important to stress. There are investment opportunities other than gold, which is always a good thing to have. But you have to really be judicious and careful and really, I think, understand, and you've done some, I think, really dexterous and nimble number crunching to make this case. And to repeat the name of your book, it could be the best 15 to 20 bucks you've spent. It's available as an ebook. You can get it right away. So we'll get that out to people. Hopefully, I'll put a link to it on the video. But there are investment opportunities, but you really need to understand the macroeconomic factors that are floating around and really understand the timing of these things. Is that a fair way of summing up your approach at the moment?
Right on. I think you and I are very much in agreement. We've had more of a conversation here than a interview in the sense that I think you understand these issues well. And it's really our goal to get as many people to understand these things so that they can survive the situation too.
Fantastic. Well, we'll keep our fingers crossed. I'm sure we'll see each other on the other side of the apocalypse. I'll bring a spear, you bring the loincloths, and we'll have a good hunt. Thank you so much for your time this week. I'll talk to you soon.